There's a constant conversation that goes on whether you should invest in crypto or you should invest in real estate. So today I'm going to tell you over the last 12 months what has happened with some of my crypto and some of my real estate. So if you see right here, I'm in one of my Coinbase accounts. I also have other accounts at other companies, but I've got $113,000 sitting in this account. And if you get really close, I've had this money in here roughly 12 months, a little over 12 months. I've made $1,200 in a return over the course of 12 months. So I put in about $110,000 into crypto about 12 months ago. And in that one account between Ethereum, Bitcoin, little Shiba Inu, a little bit of Dogecoin, and a handful of other things like Axie Infinity and Cardano and some other things, I have made $1,200. Now, of course, it's fluctuated, it's gone up and down, but as of today, 12 months from the day I started investing in this account, I've made $1,200. Okay, great. Well, the challenge with that is that if I invested that same amount of money into real estate, let's talk about what I did on just two properties right here, okay? So you guys can pull these addresses up. The first address is 334 North 83rd Street in Mesa. So this property, I bought this, let's see, when did we buy this? We'll see if it's been 12 months. Well, I'll pull up this other one because I know this one. 6761 West Sonnet Drive. That's in Glendale. For anybody that really wants to pull this up and see if we're really the owners, this is a Mesa property, Arizona, by the way. All right, so we bought this property, seller finance, on 2/22/2021. And the purchase price was $465,000 at the time. Today, the value of this property on Sonnet, this address, is now worth a whopping $697,000. $697,800. And at the time when we bought it, I was actually criticized by the person I was working on this deal with, like, wow, I can't believe you guys are overpaying for this property. So I'm gonna break down what we did to buy this and what we did to buy this, but let's first and foremost figure out what did we buy 83rd Street for? I'm curious what that one was. And I'm gonna tell you guys why I chose these two properties as a comparison. So this property, which was purchased, okay, we bought this one subject to for $75,000 on, okay, so we've owned this one a little over a year. So we've owned this one 15 months. So not the perfect example, but roughly. Oh my gosh, same thing. Here we go. What's the value of this property today? $220,000. Okay, $220,200. That's kind of weird. Subject to. That's ironic. So both of these properties were purchased, this one was purchased about 13 months ago. That was purchased 15 months ago. But why did I choose these properties specifically to compare against this Coinbase account? Well, if you see, again, this specific Coinbase account, we have $110,000 in cash of mine invested over about 12 to 13 months. In order to buy this property subject to, we actually bought it subject to, plus we put in $38,000 in cash. I might lose some people and they go, $38,000 in cash, that's crazy. Pace, I thought you said you're the subject to guy and you don't come out of pocket. Here's the biggest advantage of real estate, is that I could not safely borrow this $110,000. I had to go make money in active income, receive that money, be susceptible to taxes, take after-tax dollars, and then invest it in crypto and then make $1,200 over the course of a year. That's my money. Whereas here, this $38,000 is actually not my money. This $38,000 is the money of a lady named Allison, which is a private money lender. If you guys look at the top of my hat, you guys think it says PM for Pace Morby? No, it's private money. This lady gave us a private money loan for $38,000, which allowed us to buy this house for $75,000 subject to. If you're brand new to me and you don't know what subject to is, go watch some of our other videos. My team will probably put what is subject to down in the description below. We took over an existing Subto loan for $75,000. We had to pay for closing costs. We gave the seller a little bit of cash. We paid for some renovation, and we ultimately borrowed $38,000 to pay for all of those things. Now, that means I didn't even have to use my own money to make $75,000 to $220,000. Whereas in Coinbase, I had to go earn this money by doing efforts and then take that money, again, being susceptible to taxes, and then invest it into crypto. Now, I get it. If I invest invested into crypto back in 2017, I would have made a lot more money. I totally get that, but this is just a comparison between the last 12 months. This property, I didn't have to qualify for a loan because I bought it subject to. I didn't have to use my job description or my job history. I didn't have to use my tax returns, and I didn't even have to use my own money. What's cool about this property is this property has gone up so much in value, and this property has gone up so much in value. Yes, that's cool. I've made a gain here, let's see, 220, 175, so 25, $145,000 in appreciation. Means that property has gone up in value, $145,000. Well, you know, the market could crash tomorrow and that money all goes away. So let's, forget about appreciation for a moment. But here we've got 232,000. Oh my gosh, this is crazy. We've made $232,000 on this property in the last 12 months. But how did I buy this property? I bought it seller finance. So the seller actually gave us a seller finance loan, and I needed a whopping $70,000. So now when you add this number and this number together, you can see why I'm making a direct comparison to the same amount of money invested over the same 12 months. So $70,000, this actually came from a gentleman named Karan Smith, and he loaned us $70,000. What was amazing about this is that I was able to buy this deal, this seller finance deal, from a wholesaler. They brought it to me. They were not equipped to raise private money. I renovated the house. I paid for closing costs. I got the house furnished for an Airbnb, all with this gentleman's money. I did not use any of my own money. What's great about real estate is that I can go acquire assets that I can go touch, whereas crypto is just some magical thing in digital land that I can't really touch with my hands. I didn't have to use any of my own money, and I have gained a combined value of 232 plus 145. So what is that math? Let's do the math on this real quick, and I'm gonna erase this. Okay, so I've made 145 plus 232, I've made $377,000 in appreciation. So these properties have gone up $377,000 in appreciation. Now, why is this not a great comparison? Because again, the market could completely crash tomorrow. All that $377,000 could go down the drain, and maybe crypto goes the opposite direction, right? Let's talk about money I've actually made that has come in my pocket from these properties. Now, what's cool today is these two documents that I have over here. These show that we actually paid off both these lenders today, like literally today. The reason why we're making this video is because I just got back from the title company. These documents shows that we paid off Allison Gustafson and Karam Smith, both of their loans. So this 38 grand and this $70,000 is completely paid off. So I don't even have a private money lender on these anymore. And I'm gonna show you how we were able to do that. Number 1, 2, 3, 4, 5. Okay, there are 5 main reasons. There's a little bit of a 6th that's kind of duplicate, but there are 6 main reasons why people buy properties, okay? We buy properties for cash flow. Here's what's amazing is because Sonnet Drive and 83rd combined cash flowed over, this is crazy, but they cash flowed over $10,000 per month. These properties cash flow has brought in $120,000 in cash flow into our company. What did I do with that $120,000 of cash flow? Remember, these are Airbnbs, so they have been elevated cash flows. We took that $120,000 and paid off our lenders. That was real $120,000 that came to us because of the cash flow. I didn't have to sit here and watch my crypto go up and down, up and down, up and down. I actually received $10,000 every single month for those 2 combined properties because of the Airbnb income. So we got $120,000 in 12 months, which allowed us to pay off those lenders. The second reason why people buy properties is because of the appreciation, which we've just talked about. Okay, so I want appreciation on my properties. We live in an amazing market, Arizona, Maricopa County specifically, and COVID has elevated our appreciation. So we already showed you guys, we have made $377,000 on those 2 properties without any of our own money. Whereas here in crypto land, I had to pull 110 grand into this to make $1,200. Over here, I didn't actually have to use any of my own $110,000. I borrowed it from Karan Ram and Allison, and now we've used the gain and the cash flow to pay them back. Now I have no private money lenders. The properties have appreciated in value $377,000. If I want this money, I could refinance, I could go get a line of credit, I could use that as collateral to buy another property, whatever I wanted, but we have gained real 377 plus 120. Already between these two, I've made $500,000 by not using any of my own money, not using any of my own credit, and not using any of my own credentials. The third reason why people buy properties is for the depreciation, okay? Now, what you guys might think depreciation is a loss of value in a real estate transaction, but really all this is a tax benefit, and this saves you real money. So let's do the math on this. If I take the value of both of those properties, we bought one for $75,000 and we bought one for basically $500,000. We are at $575,000 in real estate purchased between those two houses. I divide that by 27.5 years, which is what you do, and then I multiply that by 7, okay, for bonus depreciation. So my business partner and I received $146,000 of a tax benefit through bonus or accelerated depreciation. Now, if you guys don't know what accelerated depreciation is, I'm not going to teach you that on this video, but maybe I will in the future. Just make a comment down below and tell me, I don't understand that part. Please go into that more in depth. The fourth reason why people buy real estate over crypto is because I have this magical thing called pay down. Okay, now I said earlier on 83rd, I bought that subject to, so I have an existing mortgage, and on Sonnet, we bought that property seller finance. Okay, well, in both these situations, these are both debts, right? We owe a debt, but am I paying that debt, or is my tenant, my Airbnb customer, paying that down for me? So even though I have $500,000 essentially of debt, or over that in debt, $575,000 in combined debt, I'm not the one paying that down. My client or Airbnb tenant, they are paying down my mortgage for me and giving that wealth to me. So over the course of 12 months, we probably have paid down an additional $10,000 to maybe $12,000 in mortgage pay down that really continues to just compile and compile and compile all the amazing benefits of just these two properties. Okay, the fifth reason why people buy real estate is for leverage. Now, this is a little bit of a duplicate, okay? Leverage, I have right now in equity on these properties about $377,000 in equity that I could go leverage and go use for lines of credit and other things. Guess what? I can actually do that here too, which is cool. I can go take this $110,000 in Coinbase, and Coinbase will allow me to take a loan against this, but they're gonna charge me interest, okay? Same thing over here. I can take this $377,000 in equity and I can pull it out through a refinance. I can utilize it as collateral, or I can leverage it some other way. So sometimes when you're raising private capital, not always, but sometimes you'll get a private money lender that will say, well, what if you lose my money? Which we've never lost anybody's money, but who knows? Maybe something really horrible happens. And they might say, well, do you have collateral? So that if I loan you 50 grand for this other project, that you lose that money, is there a way I can gain that $50,000 through collateral? And right here, having collateral in this property gives me a lot of leverage to go raise other capital, right? It means that my private money lenders have a safety net if they lose their money on another project. Never happened, but we always have that extra safety net. So leverage. Now, I can leverage 100% of this, whereas here, if I go to Coinbase, they're not gonna give me 100% of this. They're probably gonna give me 40 to 50% of this as a loan, okay? So it doesn't really benefit me to go here. Here's a benefit to crypto. So let's say I wanna go out and I wanna get a commercial loan, right? I wanna buy an apartment complex. The lender for the apartment complex is gonna come over here and say, okay, Pace, if you buy a $5 million apartment complex, we will give you a loan for about $3.5 million, because most lenders are gonna give me anywhere between 60 to 70% of that purchase price in a loan. Well, now I've gotta go borrow $1.5 million from private money lenders or raise that capital through a fund or syndication. Another video for another day. Let me know if you wanna hear about syndications and private money raising and where do I find these people for the $1.5 million. another video, another day. Comment below if my team sees that you guys want to watch this, we'll craft a whole entire video about it. Now, here's what's gonna happen. The lender here that's gonna give us 3.5 million wants to see that you have 10% of that in liquidity, meaning that you have liquid cash to the tune of $350,000. Well, guess what? With crypto, I can show that lender that I have crypto sitting in a crypto account, and this lender will allow me to use that as liquid capital against the 350. Whereas on this $370,000 equity, this is not liquid cash. And so I will not be able to utilize this equity as the requirement for the 10% liquidity that this lender will provide. And so there actually is a benefit here that I have the ability that tomorrow I could get my hands on that $110,000, and on this $377,000, I can't. This would require me to sell the property, pull the money out, refinance the property, pull the money out, or go borrow money against it as collateral in order for me to get my hands on that. That's not very liquid, right? It's not something that I can move and manipulate. It takes time. And so this lender over here is gonna say, nope, that's not gonna work. So there is a major benefit to having money in crypto, which is what I do. I look at this, and this is the 6th reason why people buy real estate, is because we are trying to hedge, okay, or prevent. We wanna hedge against inflation. So right now, the inflation rate is, who knows? This is a big contention right now. Could be 7%, could be up to 15%, depending on who you ask. Needless to say, it's really, really high, okay? So real estate is an amazing hedge against inflation, because when the value of the dollar goes down, real estate prices actually go up because it takes more dollars to buy that piece of real estate. So my numbers are climbing with real estate. If I go and buy a stock or a bond or something like that, it doesn't work that same way. Also, with crypto, this is what I was hoping is a good hedge against inflation, but for me, this has not been a good hedge against inflation. Why? Because $110,000 a year ago, if the inflation rate is 7%, that means that today that same value of that $110,000 is worth about $102,000 in purchasing power. So I have actually lost 7% of value on that 110 to only gain $1,200. So the reality is crypto lost me money last year. It did not make me $1,200. It lost me $6,000 or $7,000 in that one Coinbase account. So that's not a really great hedge against inflation. Everybody says Bitcoin, Ethereum, all this stuff are a great hedge against inflation. Guys, the only proven hedge against inflation has been and will always be real estate. Bitcoin and Ethereum have not been around long enough to prove track record like real estate does. Real estate has never, ever, ever failed to hedge against inflation. So at the end of the day, if you're gonna look at real estate versus crypto, I invest in both, but I'm very selective with how much money I put into crypto. It's more just a little portion of my portfolio. The majority of my time and energy is spent on building other businesses that produce cash. Coins, crypto, does not provide cash to me because I'm not a day trader. I don't want to be a day trader. I never want to go down that road. For me, it's a waste of my time. So I'm not going to spend my time trading crypto. What I am going to do is spend my time acquiring more real estate through subject to seller finance, lease options, novation agreements, and other creative finance structures by borrowing money from private money lenders to cover my cost to get in, and then pay those private money lenders off as the cash flow comes in and allows me to pay them off. We're gonna do another video about how to get active income coming in. So if you guys are creating active income in your life outside of a 9-to-5 job, I would love to hear, are you a photographer? Are you a video editor? Are you a salesman for insurance? Are you doing crypto trading? Are you doing real estate fixing and flipping? What are you doing outside of a 9-to-5 structure to make money? We're gonna make a video on that in the future, and I'd love to see your guys' comments in the sections down below. We'll see you guys in the next video.